So hello to everyone and welcome to today's session. I'm Angelica, head of the ALN Academy. The ALN Academy is an institute to promote the rule of law through education for the development of the continent. And today we have put together this webinar together with the East Africa Law Society and Axis Fiduciary Mauritius, the 80 set of compliance for lawyers. So we hope you will enjoy our discussions. Allow me to present to you the speakers. So we have today Mr. Laban Omangi, Director of Compliance and Legal from Absa Bank. Laban has over 30 years of banking experience in corporate and consumer banking, operations, risk compliance, financial crime, and corporate governance. Laban will speak today about the national risk assessment, the problems that lawyers have with operating client accounts, and the role of banks with dealing with transactions involving grey lists. Then we have Erick Cyaga, managing partner of one of our ALN firms, ALN Rwanda Case Solutions and Partners. Erick's role is to ensure the legality of commercial transactions, advising companies on their legal rights and duties. Erick will speak today about Rwanda as the case of study for the region, the national strategy in Rwanda for strengthening the financial services sector and the different compliance levels in the country. Then we have Willie Oelofse, Director of ALN Kenya, Anjarwalla and Khanna. Willie heads the law firm's forensics, risk and compliance practice. He has over 25 years of practical experience in forensic assignments. Willie will speak about risk assessment and components of a good compliance program. Red flags lawyers should look out in transactions and a holistic approach needed depending on the client, matter, scope, and risk. Then we have Ameer, Manager Risk and Compliance from Axis Fiduciary. Ameer oversees the day-to-day management of the compliance department at Axis Fiduciary in Mauritius. He has specialized in compliance and risk for over 10 years. Ameer will share with us his experience in Mauritius and his analysis on whether lawyers are complying in Mauritius, risk sectors, how to test or review a compliance program. Then finally, we have Aisha Abdallah, partner at ALN Kenya, Anjarwalla and Khanna. Aisha is today our moderator, and she heads the Disputes Resolution Department of ANK. We hope that you find this webinar informative. We'd love to hear from you. So at the end of this session, we have a Q&A session. And Aisha, I give you the floor to you. Thank you.
Thank you very much, Angelica, and good morning, everyone around the region. I think it's important before we start just to explain why we decided to do this as our first topic as the ALN Academy. Compliance is a really hot topic at the moment, and I think to set it in context, I wanted to explain where we see the region in terms of compliance. So Rwanda is probably the leading country in the East Africa region. It is currently ranked second in Africa under the World Bank Ease of Doing Business Index, and it has a low perception of corruption. Levels of compliance are different across the country. We have two countries in the region, Burundi and South Sudan, who are currently subject to sanctions. In South Sudan, these are 6 individuals who are subject to individual sanctions. And we see that the region as a whole is still dealing with conflict and political instability. However, there is good news. Overall, the region has strengthened its compliance and particularly its anti-money laundering frameworks. So in 2014, the FATFA task force recognized the efforts that had been made in Kenya and Tanzania in terms of significant progress made in strengthening the AML frameworks. Tanzania in particular was able to move off the FATFA deficient list of countries. This is a list of countries around the world which are subject to increased monitoring. So from 2014, Tanzania has moved off the list, and the only country in the region currently on that list is Uganda. However, Uganda in February 2020 made a high-level commitment to work with FATFA in terms of strengthening anti-money laundering and terrorist financing controls. So hopefully soon we will see progress in Uganda. In terms of the higher risk countries, we have Kenya, Tanzania, and Rwanda all being rated as higher risk for different reasons. Rwanda is doing quite well in terms of transparency. For Kenya, Tanzania, we have widespread challenges with corruption. We also have a lot of informal cash-based transaction across the region, which pose problems for compliance. Overall, COVID has created a lot of opportunities for criminals to take advantage of weak systems in our region. So with, for example, the increase of remote working, we have seen that cybercrime has really exploded, and particularly in East Africa. So compliance has a huge impact on the development of countries in our region and countries around the world. Lawyers have a key role to play in advising clients and also ensuring that as custodians of the law, they themselves comply with their legal and ethical obligations. So having given you an overview, I think it's a good time to turn to our first panelist, Laban. And the first question I have for Laban is, Laban, operating from an in-house role, why do you think lawyers should pay attention to compliance as a topic?
Thank you very much, Aisha. Thank you for the question, and good morning, everybody. Welcome to the webinar again. So I think you've laid out the context as to why we are doing this webinar today. But I simply want to add that I think it makes good business sense for lawyers to pay attention to compliance today, just given what you have explained. And I'll begin by giving a little context as to what has happened. So compliance proper as a practice starts around the 1990s when the US issued federal sentencing guidelines for organizations, simply because a number of organizations were found not to be following the right and correct corporate practices. Those guidelines were meant to stimulate better corporate practices and self-policing by these organizations, because if something then went wrong, ultimately those organizations that were found to have an effective compliance program were dealt with more leniently than those that did not have. And so as a result of that, around the globe, we see a number of organizations springing up, including organizations like FATF. In East Africa, we have ESMALAG. And we see a number of legislation and laws being passed to regulate the conduct of business, whether that was with regard to how you dealt with consumers, or indeed whether you facilitated what were considered to be illegal transactions. And to that end, in East Africa in particular, we've seen new legislation coming up around areas like anti-money laundering. We have seen legislation coming up around ethics, around anti-bribery and corruption. We've seen stuff around sanctions and how you onboard customers. And lately we have seen even legislation coming out around data privacy. Now, lawyers are at the center of a lot of these legislation that has been passed. And I just want to give a couple of reasons as to why I think it is more and more important for the legal profession in particular to pay attention to matters compliance and certainly to compliance programs. We are part of an international community. We trade with others, not only within the country, but across border. And therefore, lawyers are involved in a lot of these transactions that happen not only in the country and across the border. And it is important that the compliance requirements for carrying out either in-country or cross-border transactions are adequately adhered to. And so clients would often face up to lawyers to help them to structure these transactions. And that is one of the reasons why I think it is important that lawyers know what is required of these clients when they're doing these international transactions, so that we make sure that we adhere to the international compliance requirements as set out by organizations like FATF. So that's one of the reasons. So lawyers are often advisors to clients. It is therefore important that they make sure that they have the right knowledge in terms of making sure that clients do not fall foul of their compliance requirements with regard to the transactions that they're doing, because if they do, this can have devastating consequences on the transactions that they're doing. Lawyers are often also today members of, they're called upon by many institutions in terms of putting together compliance programs. So if you look at a number of the banks and generally all other institutions, these institutions are increasingly looking up to lawyers to enable them to put together an effective compliance program. So rather than on a transaction, putting in place the program itself is an area that the legal profession is ultimately being called in to help with. So if you look at some of the organizations that have suffered consequences of, for example, money laundering, many of them have had to bring in lawyers into the picture in order to be able to comply with the requirements that the regulators put upon them. And so we see that any organization that requires an effective compliance program would very often work with lawyers. As countries as well, in order to be able to deal with our international obligations, such as making sure that we are complying with the regulations that have been placed upon us as financial services industry, for example, we are required to have a program that confirms to other international partners that we deal with that we are complying with the international obligations around, for example, issues like anti-money laundering. And so if you look at East Africa, and as Aisha explained, we've all been through the subject of national risk assessments recently, largely with the intention of finding out how prepared countries are with regards to dealing with issues of money laundering. Because money laundering obviously has become a big business, causes a lot of issues for clients, and where countries are found not to be having effective programs to run money laundering, for example, programs, those will be the subject of sanctions by the international community, and we do not want to get there. And so again, for example, a country like Kenya, which is currently running a national risk assessment, they have had to call in on a number of stakeholders, including banks, including the legal profession, enforcement agencies in running its national risk assessment program, to make sure that we are not found with weak links. Because what has happened in some of the mutual evaluations that has happened before is that you find, for example, banks are okay, but then you find that there are other sectors that are part of the international financial system, and the legal profession happens to be one of those, that maybe have not put in place stringent measures to make sure that they do not facilitate illegal transactions. In many countries today.
Thank you, Laban. I'll just stop you there, because we're going to be able to delve a little bit deeper in our other questions. We want to make sure we don't run out of time. So I'll need to stop you there and turn to Ameer. Ameer, if you could turn your video on, please. I wanted you to share with us your experience in Mauritius in terms of, compliance, and whether you felt that lawyers in Mauritius were complying.
Thank you, Aisha, and good morning to everyone. Well, in Mauritius, the legislative framework imposes AML-CFT obligations on the banking and the financial sector, but also on what we call designated non-financial businesses and professions, and that includes lawyers. Now, not all lawyers are captured under the law. I have to highlight that. The obligations are on lawyers who carry out certain activities which are prescribed in the legislation. And these are principally related to carrying out financial transactions or creation and management of entities. Therefore, lawyers defending or representing a client in for example, a litigation case, judicial arbitration or mediation do not have these AML-CFT obligations. Now, as you may be aware, Mauritius was recently evaluated by the ESAMLAG, and they noted some deficiencies in their report. Deficiencies for the DNFBP sector, including the legal profession. Some of their findings were that although financial institutions in Mauritius demonstrated an understanding of money laundering and terrorist financing risk, the same cannot be said for legal profession. They had little or no understanding of money laundering and terrorist financing risk. Laban just said that a risk assessment is being carried out at the national level, but risk assessment also applies to each of us having an AML CFT obligations. Now, if lawyers have no understanding of the risk, this in itself is a risk, because lawyers are exposed to risks which they are not aware, and they will not be able to mitigate those risks. They will not be able to put in place the appropriate controls. Another finding was that the supervisory bodies were at the very early stage of commencing their regulatory activities. This meant that the majority of lawyers were not being monitored for AML CFT compliance. Now, if there's no supervision, this means that there's no incentive to implement AML CFT requirements, as any non-compliance will not be detected or sanctioned. Therefore, it is not a surprise that despite the size of the sector, only one suspicious transaction report was submitted to the authorities in 2015 and 2016. Finally, authorities were also requested to take the necessary measures to train, to outreach and comply, give compliance programs to the sector. Now, as it stands, the Attorney General's Office and the Bar Council have carried out outreach programs and trainings, and even issued guidelines to the legal profession. Now, to conclude on this, I have to say that the authorities are committed to remedy the situation, and we are hopeful that the FATF will find our framework compliant with their recommendations and international standards.
Thank you, Ameer, for that. Now I'd like to turn to Erick. Erick, if you can turn your video on. Erick, I'd like you to take us through the national strategy in Rwanda for strengthening the financial services sector.
Thank you, Aisha. Thank you for hosting me and to be able to contribute to this conversation. There is no doubt that the financial sector must have a significant impact on the real economy. However, a few years ago, a study showed that the financial sector contribution to Rwanda was only 2% to the GDP. Rwanda being set to become a financial sector, a service sector, the contribution of the authorities decided to do better. Consequently, two strategies were put in place: the Vision 2050 and the National Strategy for Transformation. First, the Vision 2050. The objective set was to reduce on the dependency on aid. Rwanda's objective is to increase the financial contribution, the GDP, from 2% in 2019 to 5.2% in 2035 and to 11.8% in 2050. The second strategic decision that was made was that the Vision 2050 had as an objective to increase the GDP per capita from $818 in 2019, which is the same today, to $4,000 in 2035 and to $12,000 in 2050. The National Strategy for Transformation has also developed three objectives. One is to widen and diversify the range of finances offered in Rwanda, to strengthen the local capital and to boost the cross-border trade and investment. The second was to build international partnership to promote professionalism in the sector through upskilling. And the third was to provide a competitive laws and tax incentive to attract regional and international investors. In this regard, ongoing reforms comprise also the laws on compliance. The first one, that law I want us to go through, is the anti-money laundering. And the second will be the law on mutual legal assistance in criminal matters. The law on anti-money laundering is enacted in 2020, mean to propose to provide banks with more disclosure requirements on accounts beneficiaries owners in the nature of the transaction in the event the owners are investigated. Another aspect of this law is that a specific investigation organ was put in place. It's called the Financial Intelligence Center. This center, this FIC, will work in coordination with the Financial Action Task Force, which is an international one, together with the ISMALAC, which is a more regional arm. The law on mutual assistance on criminal matters, this one provides for a clear procedure on how to request information and other means for cooperation between countries. So the idea here, to conclude, is that lawyers have to learn and master fast these two laws to be able to assist their client in this very changing environment of ours. Thank you.
Thank you very much for that, Erick. And as I said, I think, Rwanda is sort of setting the standard in the region for how to improve and how to improve rankings. Now I'd like to turn to Willie. Willie, can you take us through what a good compliance program would look like and how clients would go about setting this up?
Thank you, Aisha. Good morning, everybody. Let me share a couple of thoughts. First, let me start with what a good compliance program looks like. I mean, the first thing that I think is fundamental is that doesn't matter how big or small you are, you have to have an holistic approach to compliance. Why do I say that? Because we are dealing with so many regulations and requirements, and I mean, this forum is brilliant at giving us the requirements when we analyze the regulations, is to really, but we want to address it holistically. So whether we're dealing with AML, whether we're dealing with data privacy, we want to have a framework that caters for all of this, because a regulation is not new and we will have much more going forward. So we have to be agile enough and holistic enough to deal with any new regulations and requirements that comes in. That's the first point. If we look at the framework itself, I think the most critical part for me is governance structure around it. So do we have real commitment from our partners? If we are a 5-partner firm, do we really have commitment from the partners? Do we have accountability? Is there someone that will be accountable for monitoring and looking at regulation, new regulations coming in? Do we have investment? So for the larger firms, there will be some sort of investment, whether it is in people, whether it is in technology, but you have to have some sort of investment. If I move on so governance for me is key. If I move on to other areas, I think you have to have your policies and procedures set out very clearly. Once again, the lawyers are great in putting together the policies. I think maybe where lawyers are a little bit weaker is to put together the processes to support those policies. And I think I'm the perfect person to comment on that. I've worked for the Big Four for over 20 years, and I've been with a law firm A&K now for 2.5 years. So I can see where the lawyers are really strong and where there are areas for improvement. So definitely in terms of the processes and all of that. And then the last thing I want to mention under the framework is technology. So technology starts really playing a significant role in terms of compliance. A simple example, we've started as a firm for our clients a cyber defense operation very recently. And then only once we onboarded ourselves as a firm, we've realized that the technology we are using actually works fantastically well for enforcing data privacy. Let me quickly give you an example. So Aisha, Laban, and myself gets on a Teams call to discuss a specific banking issue, and I present on Teams a document highly confidential about, say, Absa, for instance, or any bank. And then Laban doesn't have the rights to look at highly confidential documentation. The settings we are putting into our backend, the technology we're using, I can actually then exclude. So if we get on a call, Laban will not be able to see the highly confidential document I'm presenting on Teams. That's a simple example, but it's a way that through technology we can enforce and basically automate compliance. Let me quickly say a couple of things about where do we start. So we've got the framework. How do we now start putting it together? I can guarantee you that each and everyone on this call, we do have some sort of compliance program, even if we don't think it's formal or whatever, but we do have something, whether it's on a spreadsheet or whether we're using tools. But the place to start is obviously to understand exactly where we are. I think all of us, we know the requirements and what we have to comply with, but we must understand where we are. The next challenge will be then to say, okay, I'm a small firm, this is where I want to be. If I reach this level of compliance, it is fine. Or I'm maybe a larger firm and I want to have full compliance. And then the trick is to identify how you want to move from where you are to where you want to be. And then it's a question of just repeat the same process over and over to make sure that you stay on top of it for future purposes. Aisha?
Yes, thank you, Willie, for that overview. Now I'm turning back to Ameer. Ameer, given your experience in Mauritius, what do you think are high-risk sectors? And also, secondly, how would you go about testing or reviewing a client's compliance program?
Well, first of all, the law does not provide for a list of sectors which are considered as high risk. However, in 2019, we went through a national risk assessment which identified sectors which were more vulnerable to a money laundering risk. So as an example, the gambling sector was identified as high risk. And I think that's indeed the gambling sector should be a high risk sector, not only for Mauritius, but for other countries as well. Now, the reason for this is when you look at that sector, in terms of AML/CFT obligations, they are not yet there. They are still behind the financial sector, the banking sector, or even lawyers. And then it's a cash-intensive business where illicit money can come in. And if a client wins, the origin of the fund would be disguised as to legitimate money. So gambling sector is one. And then I would say the mining sector can be a second one. Now, due to the high barriers of entry to obtain environmental and regulatory permissions, these activities are susceptible to corruption of a large scale. So because of the dealings with public officials to obtain the permits, the mining sector may also be considered as a high risk. Now, to answer your second question about the testing of the compliance program, one of the easiest way to do it is through an internal audit. We need someone to tell us whether we are complying with the regulatory framework or even our own policies and procedures. We need to be able to identify gaps. and see whether there's any area for improvement. Now, bigger companies, those who can afford it, they are having their systems audited by an independent body. In Mauritius, it is already in our regulations to have an independent audit function to verify compliance with the AML CFT laws and regulations. Maybe what I want to say is that at the end of the day, you don't want your regulator to come and tell you what your deficiencies are. You should be prepared before they come for inspections.
Thank you, Ameer, for that. And now turning back to Laban. Laban, you gave us a good sort of introduction about why lawyers need to pay attention to compliance. Here, I'd like you to focus on the role of the lawyer specifically because all lawyers operate client accounts. Can you talk about the client accounts and can you talk about their obligations in terms of verifying transactions, please?
Yeah, thank you, Aisha. So a couple of things that I think lawyers need to be aware of with particularly client transactions. And the first one is obviously, as was previously said by Erick, lawyers do need to understand the operative laws with regard to clients running accounts in the country. So one of their duties is to make sure that when they are structuring transactions, that those transactions that they are structuring operate within the legal framework of the country. And specifically, we are looking at KYC or Know Your Customer regulations, and we are thinking about money laundering regulations that exist in a jurisdiction. So they need to understand their clients' transactions. They need to make sure that they obtain documentation to support those transactions, because it is an offense for clients to carry out illegitimate or illegal transactions. So it is important that when transactions are being structured for their clients, that the right supporting documentation is available, because ultimately these will be requested for by banks. Where lawyers are running clients' accounts, and in many instances this is the case, it is also important that whilst lawyers in many jurisdictions may not be reporting institutions, that they understand the nature of those transactions, because increasingly financial services companies are now going back to lawyers to also begin to have an understanding of those transactions which are being carried out in those clients' accounts. Obviously, it's important that lawyers make sure that they do not facilitate illegal transactions. They need, when their clients run into compliance challenges with regulators or with financial services companies, they need to be available to provide them with the help that they require to be able to overcome those challenges. And so one of the requirements is that they need to make sure that they work closely with stakeholders, whether those are financial institutions, the enforcement agencies, or regulators, as the case may be, and to make sure that they do not facilitate any criminal transactions which could end up damaging the reputation of the client, the financial institution, and the legal firm itself. Aisha?
Yeah, thank you, Laban. Maybe, just touching on that issue of the law firm's brand, to what extent do you as a client look at things like the level of compliance of a law firm when you are selecting lawyers to use for your own work? Is that relevant or not?
So absolutely, that's relevant. So we, as a financial institution ourselves, we would have, we would be a client of a legal firm. And so one of the things that we look at is obviously the brand, the reputation, and the standing of that legal firm in the country with regards to whatever transaction we want to structure. So if you think about a loan, or if you think about an FX transaction, where we require a document such as an ISDA, which is a document that is used to facilitate foreign exchange transactions between clients or between counterparties. We look at the brand and reputation of a legal firm in ensuring that when we get our client to use a particular legal firm to structure that transaction, that they are not a legal firm that has been known to have facilitated illegal transactions in the past, knowingly or unknowingly, and making sure that they take into account the prevailing laws of the country to make sure that we do not facilitate such risks as money laundering or some of the others that are known. So it's important that firms take into account, what doing or facilitating a particular transaction through their client's account or through a client's account itself, what that will do to their particular reputation. And so there are many firms that have been left out on account of that, but there are also firms that keep getting repeat business on account of the reputation and brand that they carry in a jurisdiction.
Thank you, Laban, for that. Now, Erick, I'm turning back to you. Can you take us through the whether compliance in Rwanda is it uniform, or do you see differences in levels of compliance? And if you are seeing differences, what are those differences, or which organizations are more compliant?
Thank you, Aisha. It's clear there's difference in compliance levels in Rwanda when it comes to compare regulated and unregulated companies. Let's first explore the unregulated companies situation. Unregulated companies are governed by rules, compliance rules, general rules that come from the labor law. But companies, unregulated companies, tend to not comply to those laws. The reason is very simple. It's because the consequences of not complying to those laws are not severe. The penalties are not heavy. If we would compare it with those from Rwanda Revenue Authority, for example. The only reason that pushes unregulated companies to comply is when the Registrar General has pushed them to do so, or when they want to achieve a certain objective. Let me give you an example. In order to bid for a public tender, companies must provide a certificate of good standing. In this case, those unregulated companies will work to meet all the requirements in order to be granted the certificate of good standing. But it's also the moment for the Registrar General of Companies to get an opportunity to exercise his supervisory role. The Registrar General will then check if the company has filed annual returns for the last 3 years, and he will also verify if those financials of the company satisfy the solvency test before he can issue the certificate of good standing to those unregulated companies. The situation is rather different when we talk about regulated companies. There's a more robust compliance requirement there, which is strictly observed by the regulated companies. Regulated companies are governed by the company law, but there is, in addition, the regulator who imposes other compliance rules specific to the regulated activity. That could be banking, health, insurance, telecommunication. For example, regulated companies are required to submit audited accounts on a quarterly basis, whereas unregulated companies will only submit audited accounts once a year. The regulator also imposes to the company, to the regulated company, to put in place an organization structure that helps achieve compliance objectives. The regulator even goes further because he requires fit and proper tests, and he also approves those people who will be occupying key positions like risk managers, external auditors, company secretaries, and IT audits. Here it's clear that there is a need here, Aisha, to strengthen the compliance level of the unregulated companies in Rwanda. And I'm confident that this will be done in the process of the current reforms. Back to you, Aisha.
Thank you, Eric. And just to confirm, is Rwanda like Kenya? Kenya at the moment does not include advocates or lawyers under the requirements in our anti-money laundering legislation for reporting to our financial reporting center. I think that is the same in Rwanda, that Rwandan lawyers are also not required to designate reporting.
That's correct, but the law is changing, and we will be more and more required to cooperate with the financial investigation center, and that is going to be challenging because, you know, lawyers have their own confidentiality, protect clients. So this is going to be a very big challenge. So we'll have to sit and read and discuss with authorities to balance this situation.
Thank you for that. So turning back to Willie, could you take us through some of the red flags that lawyers should be looking out for in their transactions? And then can you also talk to us about whether there are any tools that support them in detecting these red flags?
Thanks, Aisha. I think the best way to answer that question, Aisha, is maybe to take the participants through what we do on a daily basis. So we are actively working with our M&A teams on transactions. Historically, they've done the legal due diligence, and then someone else did the financial due diligence and the likes. So what we are doing from a compliance point of view now is to actually do an assessment on the entity and to understand the risks around it. So we look at country risks, so per jurisdiction, we've made reference to it earlier. We look at the type of business and the industry they are in. We look at other risks, maybe leadership risk in terms of dominant leaders and the likes. And then we look at the type of transactions they are doing. So we identify high risk areas within their organization. That's the first phase. The second phase, and we do this by doing workshops and focus group discussions and look at documentation and the likes. And then the second thing that we will do once we understand the risk is to see whether the organization's got a structure and controls around these risks to mitigate it. So do they have, first of all, do they understand their risks? And secondly, do they have controls in place to mitigate?
Was already asked before. So at this stage, I just wanted to maybe summarize the discussions we've had, which have been of a very high quality, sometimes maybe a bit technical to follow, but there's some key take-home points for me as moderator. The first is that compliance actually hits lawyers' bottom line. So it is not an optional issue that lawyers can choose whether or not to attend to or ignore. Because in effect, if you don't comply with your own local laws and you are holding yourself out as a custodian of the law, you are negatively affecting your own brand. You are restricting the number of clients who can actually use your services because they won't want to be associated with a bad brand. And at the end of the day, it affects your revenues, your ability to monitor payments and ensure that they are genuine and that you're not paying unnecessary bribes, obviously will impact your bottom line. So that's the first take-home point for lawyers. The second is that in the compliance world, lawyers do need to work alongside other professionals. This is not an issue that lawyers can dominate and take over entirely on their own. They must work alongside accountants, they must work alongside compliance professionals like Ameer and other specialists who can add value. So that if we take the holistic approach that we've been told to take, it would involve lawyers playing a key role, but alongside other professionals. And that's something we should recognize. And then the third is that compliance starts with risk assessment. So it is not possible to have a credible compliance program that has not first started with asking yourself, what is the type of work I do? Where do I see risks for myself? Identifying the type of clients you serve, the sectors they're involved in, the type of legal services you provide. So it starts off with a risk assessment. A lot of people make the mistake of rushing to come up with a beautiful paper policy, but that is of no use whatsoever if it can be shown that your paper policy has no relationship with the actual legal services or other services you provide.